when organizations are starting out, they have two choices in front of them to formalize as a nonprofit. The first one is to incorporate in the state you're operating and also file to the IRS for charitable status. And there's a lot of infrastructure involved in developing that process, and that stems from that application. And the benefit and the reason why you'd even want to operate as a charitable entity that's formally approved and recognized by the IRS is that there are three main benefits. The first one is, and probably the biggest, is that the income you raise is tax exempt. You're not paying taxes on the donations and services and other type of income that you're bringing into the charity. And that's huge because you're maximizing resources that way. The second benefit is that for your donors, there's an incentive to give because there's a tax deductible ability to write off the contribution for them. So in the beginning, your friends and family probably might not care so much about that, but as you're growing and you're expanding your need for resources and attracting other supporters, that's a really important factor in operating as a charity, is the tax deductibility. The third factor that not everyone thinks about, but is really crucial to the operations of a charitable entity, is that you can have volunteers. You have people doing work for you that you don't have to pay because they don't require it or want it. They believe in your mission. Now, that's not really legal for a corporation to do that. It violates labor laws to have, free labor. So that's a consideration to formalizing as a charitable entity. Now, like I said, you can either file for your own nonprofit status or you can join what we're talking about today as a fiscal sponsor. So what is a fiscal sponsor? That's an entity, they're already recognized as a 501c3 charity by the federal government, and they offer this service to groups that are looking to partner with an existing charity. Now, I'm C, Social and Environmental Entrepreneurs, C for short, we're a longtime member of the National Network of Fiscal Sponsors. And I don't think there's a member among us who doesn't believe that our name is so inappropriate. Fiscal sponsorship implies financial support, but that's not really what fiscal sponsorship is. It's infrastructure support. In general, when a project partners with a fiscal sponsor, there's certain responsibilities between the two groups, but fundraising and financial support to the project is not actually included. And I'll go into the roles of each group in a minute. But with fiscal sponsorship, the idea is that you have this kind of vessel to fundraise in. You have existing infrastructure already developed, so you don't have to think about what bank you want to set up an account with or what accounting software you want to track donations, or even developing a board of directors. You don't have to do that yet with a fiscal sponsor. You may have to develop a steering committee depending on the conditions of the unique fiscal sponsor you look for partnering with, but you don't have to formalize a board. That's all within the fiscal sponsorship. But a key element of this is, you might be thinking, why does any entity go into fiscal sponsorship? It's because there's a greater mission and the work that you're performing on the front lines supports their mission. For C, the organization I work with, it's about helping individuals and groups solve a problem in their community, whether that's a local or global community. And by partnering with the projects under our sponsorship, we're amplifying that mission through the various partnerships we have. Now, a baseline understanding with fiscal sponsorship is there's a fiscal fee. So in return for the services that are offered, a portion, usually it's a fixed percentage of the funds that you raise as a project are set aside to support the operations of the fiscal sponsor. That can range in the field. It ranges from about 5% to 15% that fiscal sponsors charge for their services. C, for example, is 6.5%, and that was part of our founding purpose in 1994, is our founder wanted to maximize resources into the community. So that's something to keep in mind, that range of about average. It's a 10-point spread usually in fiscal fees. And it's a really cost-effective model because it's a portion of your funding that you have a professional team supporting you, and then by the fiscal sponsor having multiple projects, that those funds grow to support their efforts. Now, within fiscal sponsorship, it can vary from organization to organization, but there's a baseline understanding of the roles, right? So the fiscal sponsor exists to provide infrastructure and back office support to the project in essence. And the project's role is to fundraise and develop the program work of your initiative. You'll be community organizing, building your team, whether it's volunteers in the beginning or you get to the stage where folks can be compensated. You're going to be looking at addressing the needs on the frontline work, whereas the fiscal sponsor will make sure that your back office infrastructure is in place and it's compliant with nonprofit laws, the state and federal laws that govern charitable activities. And then there could be extra services that are offered based on the actual fiscal sponsor. Now, some of those baseline operations you can expect as a role of a fiscal sponsor. One is that as you fundraise, you're operating within a 501c3 charity. So those monies have to be deposited into an account that's tied to a charitable EIN, an organization. They can't go into anyone's personal account, and nor would you want that because you could be taxed on money you're not actually receiving. So those funds are deposited to the fiscal sponsor's account, and then they're allocated to your project, and they're distributed on behalf of your project activities. And then there are financial reports along the way that I'm sure Poppy can talk in more detail about later. But as a default, the full charge bookkeeping of your project activities is a responsibility of the fiscal sponsor, including, sharing information with you, tracking your budget. I mean, there are all these other pieces that kind of come out of the bookkeeping portion. Another baseline responsibility of a fiscal sponsor is making sure your organizational activities are insured. It's not something folks, always think about, but when you're operating and you're in early phase and people are, you're operating out of your garage or some park, there's not insurance in place, and nobody wants to be held accountable if something goes wrong, if someone trips or, something happens. So a fiscal sponsor's responsibility is to make sure that your activities have general liability coverage. There's other levels of insurance too, and I'm happy to go into more detail about those. It's all the fun things in life, umbrella coverage, property coverage. There's a whole package, but baseline organizational insurance is important with a fiscal sponsor. And there are more, such as human resources and grant management, but those may vary from sponsor to sponsor. So, looking at the triggers of when am I ready for fiscal sponsorship? What are the signs that I should be exploring this? Really, you want to look at the key areas of your mission. What do you need to accomplish in the next phase as far as having infrastructure to keep the activities moving and sustainable? Now, one aspect to think about if you're ready for fiscal sponsorship, are you ready to receive government grants? Are they available to you and they fit perfectly with what you're doing? You probably need to look at a fiscal sponsor that has experience and knowledge on receiving government grants. They come with different conditions than a foundation grant, but that's something to start thinking about because that support really is not offered for the most part unless you have a formal 501c3 type of structure, either your own or through a fiscal sponsor. And something else as far as, when you're ready for fiscal sponsorship is, are people ready to give? Like I mentioned, your friends and family, you can rely on their generosity so much, but are you looking to expand your network of support so that you can offer that incentive and you can assure the donor that the funds are being handled properly with accounting software and generally accepted accounting principles and other factors that need to be in place to handle contributions. Tax receipts as well for donors have to be issued. So there are a few factors that can trigger, it's time to start looking. And then what do you need from a fiscal sponsor? I would say one key lesson I've learned from the sponsorship side and seeing from our projects requests is looking for a partner. You're not looking for a boss, right? There's a lot of trust that you're giving an entity to handle the hard-earned resources. The fundraising is not easy. And when you do it and you do it well, and you have to do it often, you want to trust that who you're handing that over to is someone that will, honor that trust. And then on the other side, the fiscal sponsor is trusting you to engage in the activities that you said you would and not create some sort of risk that could, hurt the entire organization if there was an IRS audit or some compliance issue that came up. So a partner is really important. I know there are some fiscal sponsors who have formed their operations with, we're only going to cut 20 checks per month per project. They can only expect 10 emails from us per month. All these conditions and metrics that don't take in the human factor and the idea that you're doing really important work on the front lines and that not everything fits into some, structure on paper through an agreement with sponsorship. So that's something to consider is, will the sponsor live up to the trust that you're giving them? And will they demonstrate partnership in the truest form with the needs that you and your team will have throughout the relationship? Now, there are some guides that I want to share through my experience as far as when you can know it's the right fiscal sponsor for you. Because, C's been around 27 years, and I would say in the last 6 to 8 years, we've seen a shift in that the projects that are applying to become fiscally sponsored are no longer a majority of groups who have an idea, the early phase idea. They're actually groups coming over from other fiscal sponsors for the most part. And they're coming over because something didn't work. And the guide I'm about to share is kind of the lessons learned from their experiences of what to look at from the beginning to know it's the right fiscal sponsor the first time you pick them, so you don't have to jump around. First, review their website. Do they have a website? Review that to get the essence of how they operate, who they are. Are they heavy social media? Are they heavy phone and person meetings? Like what sort of style is coming off their site for their operations and policies? It's something to just get a feel for how they operate. Do they advertise who's on their team, their operations team and their board? And you could read about their affiliations and any similarities to the work that you're doing. Another one is, do they focus on fiscal sponsorship? We've seen a lot of folks come over where we call it the buddy sponsorship because there was a need in the beginning. You're operating, you're ready to formalize, you look for a fiscal sponsor and you have a buddy who has a 501c3 and they want to take you in, but they've never done fiscal sponsorship before. So, it's not a reason not to move forward, but I would advise to just think about, do they have other projects? Do they have a memorandum of understanding or agreement with fiscal sponsorship? Do they have the terms of the sponsorship outlined anywhere to share? Or is it so brand new? And being brand new to it could be okay too, you have to start somewhere, right, as a fiscal sponsor. But if that's something important to you, is to know what the terms you're entering into, look for that in the beginning. Fiscal fees, are those outlined? And then another factor to consider is, does the fiscal sponsor run their own programs? This can be a major pro or a major con, depending on your position, because we'll talk about the pros first. So there could be alignment with mission. They understand your work, your unique struggles for the frontline activities of your project, and they could introduce you into existing funder relationships and opportunities. That could be really beneficial because their programs are so aligned with what you're already doing. The con is that you may end up competing for funding with them. And that could become a major issue. and everyone's friends until money can get tangled. So are there grants that you may be looking at going in together? Are those terms outlined of who's getting what portion of the grants? We've seen a situation where a group, I think it was a buddy, they started as buddies, and then they had mission alignment. They had the programs that were being run were very much aligned with the project that was being fiscally sponsored. And what happened over a few years' time is they kind of merged into each other. The staff started crossing over from the fiscal sponsor to the project and vice versa. So when it no longer worked and the project was leaving, they weren't actually a project anymore. They were a program. It was legally different. So their attorneys had to help untangle it. It was a little more complicated, which can work when it goes well, but it could get kind of sticky if you're looking to just be a project of a fiscal sponsor. And then another factor is, do you want them local? Is that important? Are there government grant opportunities, state, county, city, that require a local partner? That's something that could be really important as you think about your funding sources. And maybe it's not, maybe you don't want them local, maybe you're okay because you want everything to be done over email and telephone. But it's a consideration of, what are you looking to achieve out of the relationship, and what kind of relationships outside of the fiscal sponsor are you looking to develop? Usually if they're government run, that's where a local sponsor may make the most sense. And then, is longevity important to you? That the fiscal sponsor has been around for a while? That can be good for the most part. We've seen some fiscal sponsors turn a little stern in their age as they grow over time. So that's where you lean on partnership again. Even if longevity is there, is partnership still there? Because it can be beneficial when practices are developed, so it's streamlined and it's kind of plug and play. You're going to join an existing entity. They know how to efficiently move your money and your resources to the needs. But partnership is important. I can't emphasize that enough. And then the last guide I would just encourage to consider when looking at the right fiscal sponsors, are they open to you speaking with their existing project partners? You can get a really great sense of how the fiscal sponsor operates, even from that first question. You can see, are they open to that? Do they embrace the opportunity to introduce you to other projects? Or is it something where there's hesitation? I mean, that's not good. So it's just something to consider, and talking to other groups about their experiences with that sponsor. So the next topic we want to kind of go into is, now that we've talked about what's the benefit of fiscal sponsorship, what is it? How does this fiscal sponsor make their money? How are resources shared, and then guides. So we're going to pivot into real life experiences from the field. I'll just begin by talking about some of the benefits that I've been able to witness firsthand that our projects have experienced through our relationship. And obviously I'm biased, but there's been some really great work that's come out of fiscal sponsorship. And first and foremost, it's the ability to operate as a charity. I mean, we can't ignore that, even though we've talked about it. This formalization really helps projects free up their time. As the project director or someone working on a mission on the front line, your skills and talent and expertise are better used working with the community. In fact, they're wasted having to work on accounts receivable and payable and sourcing insurance policies, developing human resources. It's really a way to free you up for the important work on the front lines. But another benefit is that you're entering into a relationship where you don't have to figure out how to run a charity. There are a lot of rules and laws that govern how a charitable entity can operate. And there's a lot of, tax implications if you do things wrong. So you don't have to learn that from scratch. By operating with a fiscal sponsor, you're able to observe best practices and then policies that are formed based on making sure that the charity is complying with law. They're not just internal board decided policies. They're actually based on law for the state or federal requirements. So we've seen a lot of our projects who operate with C, and then there's a point where they decide it makes sense to spin off and file for their own nonprofit status. And they carry a lot of our policies and procedures with them, so they don't have to develop from scratch. It's a good baseline where you can always customize it for the needs of your unique entity, but you don't have to develop a 30-page operations manual with nothing. You know, you can carry Cs forward. It's a really valuable benefit. And then there's established relationships with funders too. We've seen a lot of projects who you're starting out and you don't have the reputation built up quite yet with the funders who support your program work. When a program officer sees that the fiscal sponsor is someone that they work with often and for many years, there's a reassurance there that they know the funds will be managed properly. There's less risk really for them to take a chance in supporting a brand new effort. I've had a program officer say to me many years ago that, you know, I prefer to see smaller groups working with a fiscal sponsor because I know there's a team of professional accountants who are managing the funds. I know the funds are going to be spent on what they're supposed to, and I know we're going to get a grant report at the end of the period. So there's a unique benefit there from those existing relationships. And then, as I mentioned, there's a team of professionals, of professional accountants, HR professionals, organizational insurance professionals, brokers that we work with, payroll vendors. Those are already there, and you essentially, with most fiscal sponsors, you pay as you go, really, with the fiscal fee. So you have the advantage of talking with these professionals, working with them for a very low fee. So those were a few of the benefits. There's many more and I could keep going, but I'm going to hand it over to Heather to talk about her real life experiences with fiscal sponsorship.
Yeah, absolutely. Thank you, Jennifer. So good to see everyone this morning. I'm excited that everyone's joined today. So I'm going to offer some perspectives from being involved in fiscal sponsorship relationships myself. So I've been involved in a few of those. So for one, as a funder, of course, we deal with fiscally sponsored organizations, right, which some of you are. And so I'll talk a little bit first about the funder's perspective, and then I'll talk a little bit about my own experience separating CPF from our fiscal sponsor and a few other organizations I've worked for. So the first thing to talk about is, as a funder, how do we see fiscally sponsored organizations, right? What's our perspective? Is it a positive thing? Is it a negative thing? As Jennifer mentioned, I think there are a lot of positives to fiscal sponsorship, and sometimes it really is the best way to get your project off the ground, to get you from the startup phase to sort of begin building that infrastructure. From our own perspective as CPF, that's why we started with a fiscal sponsor, because we had part-time staff and we weren't quite ready to begin building a board and writing our own policies and all of those things that come with it. So again, from the funder's perspective, we see organizations enter into these relationships for a few different reasons. For one, they can be in the startup phase. So you don't have the capacity yet to manage your finances. Maybe you don't even have a finance person or a CPA engaged or hired. Perhaps you're just not quite there yet. You're just starting off with this early idea and you're not quite ready if you want to make it. You're not sure if you want to make it a nonprofit yet, right? You're just kind of working on the project basis and you're still planning, and that's okay, right? It's a great place to start in that condition. Could be another situation where perhaps you're just looking for someone to take that money for you, right? You've got a great idea and you have a lot of really wonderful funders who want to fund your project. But again, you're not quite ready to become a 501c3, and that can take a lot of time. One thing to give you guys a heads up about, again, Jennifer did a great job explaining what becoming a 501c3 looks like, or what some of the benefits of that, right? But it does take time. For us, it was almost a year between when you file and when you get that letter. Everyone here has dealt with the IRS and knows that it's not a quick organization, right? It's not a very speedy entity. And there's no real way to get checkups on how your application is being processed through the IRS. So it may take a lot of time and you may need something in the in-between to get you by. So we see these things and we understand these things, right? So one thing from a funder's perspective is just let us know where you're at. maybe why you've entered into this relationship, what some of your reasonings are, what your future plans are. Again, we understand this. We've been here too, as have a lot of funders. They see these kinds of things all the time, but just explain to them, right? Communication is really important with your funders in all ways, but especially with fiscally sponsored relationships. So another thing to keep in mind is that, as Jennifer said, one reason why we like to see organizations start with a fiscal sponsor is because we know that the money is managed well on the back end, right? At least fingers crossed that you've got a great fiscal sponsor. But the idea is that they do have these accounting practices in play. They already have great accountants, they have software, they have experience knowing what generally accepted accounting principles are. And so we can trust that by giving you funds to work on your project or your program, we know that it's managed well, and we know that there's someone there to hold your hand if you have finance questions. Because the reality is that sometimes as a startup nonprofit or a startup organization, you're just doing your great work, right? And we want you to continue to do that work sort of unencumbered by all of these other organizational processes that it takes to become a nonprofit. Sometimes that's not your strong suit yet, and that's okay. And we like to see that because it means that you can focus on what you are good at and build that internal capacity. Now, as a capacity building funder, we have a bit of a unique perspective, right? So we're really looking at long-term sustainability and building that capacity. So it's particularly important for us to see that and to see that sort of long-term growth and transition. So again, that can be a real positive for us to see with organizations. The other thing that can be really helpful is there's the legal component of that, right? And this is something that Poppy could certainly attest to, and I'm sure Jennifer too, that sometimes it can be real messy legally to be a nonprofit, right? There's a lot that goes into that, making sure that you're compliant, that you're registered in the right states for fundraising, that you have your bylaws and your governance policies and all of these pieces that can take a lot of time and energy to create. So it's really important that those things are tight, and we can trust not only that you have your finances in hand and accounting is going well, but also that there's a lot of confidence in sort of your legal status, right? That somebody else is handling all those back end issues. Like Jennifer said, there's insurance in place. So it gives us as a funder a lot of confidence. And I will say that, again, as a small capacity building funder, relatively so, we have a different perspective. I want to also mention that there could be other perspectives from funders, and it is important to note that for us, we do eventually like to see organizations kind of move up and out eventually, right? That's for us, we want to see long-term capacity. You know, are you going to be here for the next 5-10 years to do your important work in Native communities? So for us, that's a really important consideration. Are you thinking about the future? Do you need some help from a fiscal sponsor to reach that point? But there are larger funders out there, particularly larger funders, with pretty different perspectives on this. They can see being fiscally sponsored as a real detractor. You know, they're looking perhaps for a large organization who can take a lot of money at once, who could take $100,000 grant or something, right? And that does require a certain level of sophistication that can be challenging to reach when you're in that startup phase. And so in some cases, there are funders who don't want to grant to fiscally sponsored organizations, or they have special conditions for granting. So I'll use a personal example of ours. With the David and Lucille Packard Foundation, we were seed funded by them and by the Christensen Fund, wonderful organization, and we have a deep relationship with them. But in their condition, they wanted to give us money, and they did. They gave us project support, but they weren't able to give us general operating support until we full-fledged as our nonprofit. So that was a challenge for us. Is we had a lot of funding, we had people who believed in us, who really were great fundraising partners, but they couldn't give us unrestricted money, or at least money that we could use the way that we thought was best. And so we spent a lot of time putting, effort into budget proposals and grant proposals, the actual narrative, and then sort of felt like we were hemmed in, right? And that was no fault of our funders, right? That's their policy. But it did make it more difficult to pivot when we had opportunities or challenges, because we couldn't really change how we said we'd use that money. So something to just keep in mind about how a funder sort of sees that then again, the best thing that you can do is to just talk to your potential funder and explain what your plans are. If you, for instance, say, hey, I'm just using this fiscal sponsor for a couple of years to get my feet under me, you may have a very different answer, even from an organization like the Packard Foundation that's sort of that large and has that many rules. So just keep in mind, again, communication is really helpful, and to think about, again, who your donors are, who your funders are, and what those relationships might look like. So moving on to a few examples of sort of positive and negative experiences. So again, we wanted to do this webinar really to help you guys know that you're not alone. I know it can be kind of a scary and strange place to be figuring out what your next steps are, what your future looks like. We went through the same thing ourselves. Poppy can attest, and so can Marissa, right? That when we went through our own fiscal sponsorship transition, it was very scary. We didn't quite know what we were doing yet, and it was, it seemed a lot harder than it actually ended up being, right? Not to downplay that there are quite a lot of steps along the way, but we understand that it can be a challenge, right? And that fiscal sponsorship itself can sometimes be a challenge. So the first thing I just wanted to note is, again, that we've been through the same thing, even as a capacity building funder whose sole existence really is to fund organizations that we know already have the knowledge to do their good work, but just need some help with capacity. Even we struggled with that, right? And had our own successes and challenges in building our internal capacity. And so again, no question is a bad question in our opinion ever with CPF, because again, we've been there. So one thing that I wanted to note is that, I think in the multiple fiscal sponsorship relationships that I've seen, and I've been involved with 3 in my career, 2 out of those 3 were what you might characterize as a difficult relationship. And then 1 was a very positive one. Now, I'll say that I've encountered a lot of other fiscal sponsorship relationships that I have not been directly involved in, and many of those have been very positive. So don't think that 2 out of every 3 relationship, fiscal sponsorship relationship is going to go that way, right? Just happens to be in the situations that I was in. And there are plenty of really fantastic experiences, especially with a fiscal sponsor who, like Jennifer said, kind of knows what they're doing or really understands your needs, really has that back end strong. So there are a lot of great examples of successes in those relationships. But a couple of the highlights, I suppose, that I've learned are the 2 words that you should always keep in mind are communication and clarity. Those are the 2 things that you should never forget about, because in every successful story that I've seen and in every negative story that I've seen, the better the 2 parties understood the roles of each organization and had better communication lines, the easier it was and the smoother it went in every single case. And in every case that things have gone badly, in my experience, there has been a breakdown in communication. And that's a huge part. It's part of that relationship piece that Jennifer talked about. So we really want to keep that in mind when you're looking at a fiscal sponsorship relationship. If you see some red flags with communication, address them early on, and with clarity as well, because these challenges will come up again later and perhaps in uglier and more difficult ways. So one of the challenges that I've seen where things have not gone so well is where a fiscal sponsor assumed what the sponsee needed, right? Maybe they didn't really understand what the project was or what you're doing with your work. And so there were a lot of assumptions, and they just kind of went forward and did their work, and there weren't a lot of communication or conversations about what those needs were. Could also be that the sponsored organization didn't know how to ask for the right things. You don't know what you don't know, right? And so in our case, we had part-time staff. We didn't, we were still getting our feet up and under us. We didn't really know that we could ask for the things that I learned later, right? We didn't want to be a bug, didn't want to be that organization, right? But we learned later on that we should have been that organization that asks a million questions, because it would have saved us a lot of headaches. And it's okay to ask for help from someone else who might know a little better than you. That's why we engaged Poppy. So we talked to other organizations that had also been fiscally sponsored, just asked, what would you recommend? What did you do? And it helped us be able to ask the right questions of that sponsor. So some successful characteristics are you want to have a designated person who works with that fiscal sponsor, or at least know that you've got some contact people on both sides. In our case, and in other cases I've been involved in, it wasn't clear who you were supposed to work with, right? You might have 3 or 4 accounting contacts, and that's kind of hard to know who to ask for a financial report from. You may have a great relationship with the head of the organization or the CEO, but the account manager you're working with doesn't know you very well. Or maybe in your own organization, you've got an ED who's doing a million things at once, and they just haven't had time to check in with that fiscal sponsor lately. So just make sure that you have someone who can be that designated person in your organization and also in the sponsor organization, right? That you know the people you're working with. And it's a lot easier that way. We noticed this where we would have people come in and out to be our accountant contacts, and then onboarding the next person and explaining what we do as an organization was difficult, right? Because they had to relearn everything. Another successful characteristic is talk about the future, right? Again, as I said, it's really helpful if you have those conversations early on and you sort of know what your long-term goals are, right? If they know that eventually you have the idea that you want to full-fledged into a 501c3, hopefully that fiscal sponsor can help you get there and can really support you on your journey that way. And that was part of our issue is we didn't really know where we were going to go yet. We hadn't quite decided a timeline, any of that. And those early conversations weren't very deep about that plan. And so we learned that it was a challenge because we didn't really have that open communication to say, hey, we're starting to move forward with engaging a board. We're starting to write our own policies. We're starting to do those things. It just felt very disconnected. And so we saw a lot of challenges with that in our case. So again, the most important words to keep in mind throughout any of this for a successful sponsorship relationship is really communication and clarity. And those are also the things that go wrong when you don't have a good relationship with your fiscal sponsor. So keep those 2 things in mind and things will go a whole lot easier, I promise. Now, I did want to introduce Poppy here because there are some considerations with federal funding sources, and Poppy works a lot in that field. CPF does not. We don't work with government funding currently. So we wanted to bring in Poppy's expertise here because we know some of you do accept federal funding and there are some special considerations there. So Poppy, you want to take it from here?
Thanks, Heather. I was all muted. I'm there now. So I want to talk a little bit about federal funding specifically. This is, Jennifer talked about this and Heather talked about this sort of generally, funders, what funders look for. But I want to speak specifically about federal funds because there are significant federal funds that would be available to each of the organizations or projects or people on this call. There are significant federal funds that are available for work in Indian country, work in food and agriculture specifically, work in rural development specifically. Just under the USDA, there are, well, billions with a B, not M, right? There's billions of dollars a year in competitive funding for the very kind of work that you do. And in most of the USDA programs, there are very specific set-asides for community organizations, community projects, and additional set-asides for projects that are Native-led and associated with the tribe and the tribal enterprise. So, you know, you're well ahead of the game, except they also have very strict requirements for how that money is managed. And usually what will happen is in the competitive application, there's a section on management. And in that section, you have to explain your management strategy and capacity. And what they're essentially looking for is an organizational resume. And the organization has to be able to say, we've been around for X years and X needs to be a number greater than 5 for sure. I mean, they don't say that in the application, but they definitely say that when they're reviewing you, right? Because you're going to be competing against people who will definitely be around more than 5 years. And so you'll fall behind them and you won't win the award, right? So been around a little while. And then the other question is, have you managed federal funds before? And then looking for an organization that can say, yes, we manage X million of federal funds most years, or have in the past, or we have received these many specific awards from this agency, so you can trust us because we know how to do it. So for a new organization, even if you have, and I've worked with organizations where the leadership had all the knowledge and capacity to have formed their own nonprofit on day one and to have managed it in a really professional way. But if they had done that, they would have essentially had a blank resume and they wouldn't have been competitive for the funds. So they ran for about 5 years under a well-known fiscal sponsor. They gathered their resume of, as a project under this fiscal sponsor, we participated in these federal awards. We are now on our own with the same management team. And that's why you can trust us now as a new organization with this substantial resume to have these federal awards. And even then, you know, that first year that they were on their own, there was a dip, there was some reluctance to fund them until they got a few awards on their own. And then they were able to ramp back up. So that's the main thing I want to say about federal, being very aware that there are substantial federal funds available to you, and you should have really a strategy just around those federal funds. The other point I want to make really quickly is sort of on these lessons learned from the field and what I see. Heather and Jennifer both talked about what they're looking for. My perspective is I sort of reviewed all the nonprofits that I've worked with over the past 30 years. And when I thought about it, I couldn't say that people come to me in a tangled mess trying to get out of a bad fiscal sponsored relationship any more or less than they come to me 4, 5, 6, 7 years into being their own nonprofit, and they're a complete mess all on their own. So I have to say, honestly, I don't see great difference in the odds, okay? So what's different are the few nonprofits, whether they go under a fiscal sponsor to begin with, or whether they just start out from day one with the right resources supporting them. The difference is always the leader, the individual who has the idea. It's always a person, right? It's one person. It might look like a small group, but there's a leader there. There's a person with a vision. The organizations that are successful, however they go, that person takes the management and the money and the legal stuff really seriously from before when they even start. They are putting their financial team in place before they start, and they've informed themselves about how to read financial reports and be comfortable with financial reports before they even start. And the organizations that end up a mess, either pass, fiscal sponsored or on their own, the person who's in charge is so focused on the mission, and they have some sort of a belief that the money is for other people to deal with. And it's, you know, they're mission focused and money is other people's problem. And they think they've hired someone who will take care of the money for them. They think because they hired an accountant or because they had a fiscal sponsor, they're sort of off the hook. And they don't read those reports and understand them and question them really daily and weekly as they're starting up the way they have to build a solid organization. So that's what I see in the field. It's either way you go, there's no way around having to be solidly engaged with management stuff. And it's, you know, it's the people that have the jobs out in the field doing the projects that get to have the fun. That's just the truth of the matter, right? If you're the person that's in charge, that's your job, is to stay focused on the hard stuff of the money and the legal compliance. Back to you, Heather.
Yeah, great points, Poppy. Really good points. And I think that is a good bottom line, right? Is that you still need to do organizational development work no matter where you're at in your journey, right? That's part of being a successful program, project, nonprofit, any of that. So thank you for that, Poppy. Now we do want to talk a little bit about when to look at transition and how to create an action plan. So What should you be looking for when you decide that maybe you do need to look at transition? What are some of those signs? And what do you do when you notice those signs? So how do you spin off? How do you find another fiscal sponsor? What are some of those points? So one thing that I want to talk about here, first off, is just, again, some warning signs from my perspective, again, in the relationships I've been involved in and what I've seen as a funder, that sort of tell you that you need to start asking some questions or start looking at things a little bit differently, having some conversations with your board, with yourself, with the ED, whatever, right? With your fiscal sponsor. So the first item there is, again, as Jennifer said, sometimes it's really helpful to find a fiscal sponsor who's already done it before. So someone who is already set up to be a fiscal sponsor. It's not always the case, right? There's certainly situations where you have an organization who has the capacity, maybe runs quite a lot of programs and can do that. But in many cases, it's really helpful to have that fiscal sponsor already sort of know what they're doing, right? And so there are times that we encounter situations where a fiscal sponsor is not prepared to
I came and
manage.
send them out too.
And so what they'll notice there is, that there are some warning signs with just regular operations. So one warning sign that I saw in an experience I was in was the fiscal sponsor didn't really sponsor organizations. They were actually a legal entity. They were very supportive of the program work, but they didn't really know how to work on the back end or how to do that. And so one thing that came up is this was a political advocacy organization. And so they had a lot of last minute travel, a lot of last minute supply purchases, just kind of last minute things, right? They followed the news cycle. They followed where the advocacy needs were. Well, their fiscal sponsor didn't do things that way. And so in that case, the fiscal sponsor only cut checks every 2 weeks. They didn't have credit cards. They didn't allow bank transfers. They were pretty stringent in the way that they did business. And in that case, the staff ended up having to purchase items on their own dime and be reimbursed every 2 weeks. And sometimes this was thousands of dollars. So it was a sign in that case that that fiscal sponsor, that relationship really wasn't in a good place, because everyday items just weren't getting done in the way that they needed them to. And that was really a challenge. So some of those things, if you're not having your regular business operations met, right, that's not great. You might want to talk to your fiscal sponsor, think about, do I need to switch sponsors? Do I need to go separate from a sponsor? If you need that credit card that you can use 24/7 and you're not working with someone that can do that, think about that. And that is a big deal. It seems small, but when you're in the thick of it, it's a real headache. Another warning sign is a lack of a clear agreement. So again, I've seen this a couple of times, again, as a funder and as a sponsee. And in our case, it was kind of the buddy system, just like Jennifer talked about, right? It's a very common relationship. So, no shame to anybody who's involved in any of that at all. Sometimes it works very, very well. But in our case, it was the CEOs who were friends, they were colleagues, and this happened a decade ago. And so back then it was just a handshake and it was a really sort of easy relationship. And they said, yeah, of course, we'll start you. We'll help you get that project started. We had a couple funders who were willing to buy in and it was all roses, right? Well, 5 years later, so we'd gotten a lot bigger. We had a lot more money and a lot more stuff to do. And we still had part-time staff and fiscal sponsors still didn't really know what we were doing day to day. And so roles became a lot less clear over time. And we didn't have an agreement to fall back on or to say, hey, I expect this of you as my fiscal sponsor. We never signed anything like that. And so, yeah, 5 years before that, it was no big deal. But 5 years later on, we learned we should assign something that was a little easier to refer back to so we were all on the same page. And even if it's a real positive relationship with your fiscal sponsor, those agreements are incredibly important. So memorandum of understanding, some sort of written down process for what you guys expect out of each other. And sometimes even what you expect into the future, right? Some fiscal sponsors will say, hey, we want you guys to be out in 5 years and we want you to have a plan for that, right? So it's much better to put that into an agreement sort of at the offset that there is a plan in place than it is to kind of negotiate that last minute 5 years later, right? So that's a big one. If you don't have an agreement, get an agreement is my best example. And if you need some help from a lawyer to review that, that's fine. There are plenty of wonderful nonprofit legal services in Arizona and New Mexico in the Four Corners region that can help you understand what an agreement should look like or how to protect you and your own organization. And most fiscal sponsors won't mind that because they also want to make sure everything is legal and looking good, and they also want to protect themselves. So don't feel embarrassed if you need a little help to understand that contract, you know? Now, another one is signs from a sponsee perspective is if you're not getting regular updates. This is a huge one. Poppy is completely right. Again, if you're not seeing financial statements, if you're not getting updates from your contacts, that's a really big warning sign. And we dealt with this again in our own experience. I've seen this happen a few times where you're just not getting monthly statements, financial statements. In our case, it was investments in particular. We didn't even know what we were bringing in with investments. That's a really hard position to be in, right? And not a very informed one, not a very strong position financially. So make sure that you're getting these updates, that again, you're communicating, that you're giving the fiscal sponsor updates regularly. Maybe it's a monthly call, maybe it's a quarterly call, maybe it's every week, you know, whatever you guys need to work out, but make sure that that communication is happening and that you're getting what you need. So again, you know, with financial statements in particular, it's really important not only that you get them, but that somebody is reviewing them from your organization and making sure that they look right. And someone who knows enough about accounting and your organization to be confident in that statement. So in a case that I was involved in, we ended up having to keep a second set of books, and you should never, ever have to do that with a fiscal sponsor. It's not a situation you want to be in. You know, really shouldn't be doing that or shouldn't have to. And they should be working together with you to manage your finances. So don't put yourself in a position where you're not receiving things and you're not asking. You know, again, in a couple of situations that I've seen, we just didn't ask. We didn't push, you know, we sort of thought, well, you're the experts, right? And they weren't the experts, it turned out. And so it was really, really important for organizational health, for funders, right? We needed these reports to get grants in, to write proposals, for budget planning, for transparency. So many reasons why financial reports seem like just another statement you might get, right? But they're so important for so many reasons. So don't be afraid to ask. Because again, these are warning signs that you really want to avoid if you at all can. And they're pretty big warning signs, right? So they should pop up pretty clearly, and you should be able to say, hey, let's pivot, let's have a conversation, let's rethink what we're doing. So those are some from my perspective. I wanted to also introduce Jennifer again to talk about, from a fiscal sponsor perspective, there are also some warning signs on that side of things that I think Jennifer can share a lot more about. So I'll pass it to you.
Okay, thank you, Heather. I have to just underscore Heather's point about communication and transparency are critical. And when one of them is missing, and worst case, both of them are missing from the relationship, this is where, you know, things are off the track. And going into specifics, you know, financial reports were mentioned, but I want to drill a little deeper because the situation with C, as I mentioned, where from about 2015 to current, we're having a lot of conversations with groups who are fiscally sponsored elsewhere, and it's gone awry, and there's some trauma there. I mean, there's real issues that have happened and stress that gets compounded when you are trusting that other party. And more specifically, some common issues we've seen from those situations come up when, with financial reports, all of the financials should be reported in an accounting software. There's QuickBooks, which, you know, most of you have probably heard of, and then there's a variety of others that maybe you haven't heard of, but they're just as good, or not, if not better. And some of those softwares allow you to have cloud-based access, and some of those softwares were, you know, the accounting team has to download to an Excel report. Either way, the report should be in the same form that they extracted it from the software as what you receive. Because something that was happening with a couple groups, not through C, they came to C, is that the financial statements they were being given were being created manually or being edited. I mean, that's a red flag. And you may not know when the report from QuickBooks, there's QuickBooks Online and there's desktop. If your fiscal sponsor uses a software that's a desktop and they have to export it to Excel and you receive an Excel, that's okay. There's nothing wrong with that it's in Excel. It's just that you want to be able to compare that to another spreadsheet then, like a balance sheet. Are they giving you a profit and loss statement and a balance sheet? Two different types of reports that can align in certain ways. They won't be exact mirrors of each other because they serve different purposes, but is there something to cross-check to make sure that your balance is what it should be? So that's something to consider, as when the financial statements may not look consistent. You know, the formatting is different. There's different signs that it's not the usual version you're receiving. So that's something to just keep in mind. That could be a sign. It's a very subtle sign, but as Poppy mentioned, and I agree 100%, the directors of the project, the head, the ED, they have to have some kind of financial awareness of the activity. It's their job, it's their duty. And if a fiscal sponsor is only issuing statements once they're requested, and then they may not look consistent, that's something to keep in mind. Because that could be a bigger issue. Another issue that we've heard of from the field that's a warning sign that turned out to be something bigger and worse was when the fiscal sponsor was taking more than the agreed upon fiscal fee. And this can happen with those buddy systems where it could morph into a program versus a project where they're saying, well, our staff was working on this grant too, so we're charging you for staff time. And you look back to the agreement, hopefully you have one, where that's not something that was part of the terms, where they could bill staff time to your project. That's something where, you know, it may be a sign of financial difficulty of the fiscal sponsor or financial health of the fiscal sponsor. It may be new management within the fiscal sponsor and they don't want to honor the original terms. But that could be a major issue, and it has been from the field. And then, as Heather mentioned, creating your own records. Once you start doing that, it may not be something as obvious as, I don't trust my fiscal sponsor, I need to track everything. Maybe it's something where you just feel the urge to create your own donor list. So when you receive checks or donations, you mail them to your sponsor, you want to make sure they don't miss one or misallocate one to your project. Or expenditures too, if there's something related to that where you feel the need to track, that's a sign that trust is broken. You know, whether sometimes they can creep up on us and we just live that way for a bit before realizing the trust is broken. But there are so many issues with creating your own records, not just a second set of books, you know, as we heard about, but also you're paying your fiscal sponsor through that fiscal fee for that service. And if they're not providing it, they're negligent on their obligation to you as a project. You shouldn't be spending your time doing that. There's a philosophy that I have at C and that I know many of my peers in fiscal sponsorship agree upon, is that a fiscal sponsor is here to make your life easier. If we're not, and we can't get away from IRS regulations and there's certain bureaucracy we all have to deal with, so don't fault us on that. But if we're not here making your life easier, as Heather mentioned, where we're forcing you to fund expenses out of pocket because we're just being, you know, difficult about issuing payments at a more frequent schedule or exploring credit cards, maybe that sponsor never offered it, but why not explore it? Then something's wrong with the relationship. That's a warning sign. When your fiscal sponsor is causing you stress in your life, that shouldn't be the case. And I know this because that's our goal here at C, is to always conform to the needs of the projects we're here to serve. Just like your project is there to serve members of your community for whatever initiative or mission you're focused on, and you need that feedback from those folks in the field to make sure that what you're providing to them is actually serving them. The same applies to fiscal sponsorship. If what's being done by your sponsor is, you know, resulting in unclear communication, lack of transparency, just difficult unresponsiveness, it's time to act. And that's where, you know, we could talk about developing a plan, and you really have three choices in front of you. a fourth choice of no action is not an option. You talk to the fiscal sponsor and you address what the issues are to see if you can salvage the relationship. Or you can explore another fiscal sponsor. And your third option is you can consider incorporating and developing your own 501c3. But those are just some of the signs that I think are most relevant for this discussion. There are some more that kind of are prongs off of those baselines, though, of communication and transparency. So I'm going to hand it over to Poppy to continue this discussion topic.
Thanks, Jennifer. What I think about, my question is, when do you start thinking about a transition? And I say the answer to that is the same day you start thinking about whatever you're doing, right? Because the way I think about it, the person in charge, whoever you are, you're not the ED because you don't have an organization yet, but you're the person leading this thing. It's about your pathway to having all the skills that you need to essentially be an ED. And if your self-assessment of, how many things you have to learn to be that person and how long it would take realistically to get there, or if you're really clear that that's just not for you, period, right? No matter where you land on that, I think you need to start thinking about those things on day one. And if you go with a fiscal sponsorship, which is appropriate as you're starting out, if you think about that relationship as always learning all the things that are involved in that fiscal sponsorship, all the things that that fiscal sponsor does for you in a good relationship, or being able to recognize when they're not doing something that you have reason to believe they should be doing, as you evolve, right, as that understanding and that knowledge for you evolves, you're preparing either to leave or to engage in that relationship in a constructive way and make sure that it works for you, or to find a different fiscal sponsor. So for me, the watchwords are communication and transparency. For me, the watchwords are your personal growth, your personal understanding, your growth as a manager. And I know this wasn't planned, Jennifer, but I'm really curious to pass this back to you for a second and say, can you think of people that you've worked with who were leading a project who really did a good job of sort of growing their own nonprofit management skill set from almost zero to ready to go lead their own, but still stayed with you, but they were successful because they kept learning?
Yes, thank you. I'm happy to answer that. So something that I know happens when someone's motivated to help on an issue and they're the founder is what you had mentioned, Poppy, where the financial part, the insurance, it's not the fun stuff in life, but they have to engage. So something that, we offer at C is, of course, there are financial statements. Those can be created for you, or we have a cloud-based system. You can log on and see at 3 a.m. on a Saturday, who are your donors that past week. But to go a step further, is there's an option for those who are interested, and even not even interested, they know they have to fulfill this obligation of financial literacy. So we set up a budget versus actual spreadsheet that's customized to their group, and it's updated monthly. And what we do is we first present it and we show them how it works. To see all of your line items with what you've spent or not spent, and the percentage of the point we are in the year, and what each line item, your telephone bill, from your expenses, or your individual donations versus grants, your line items, where they hit percentage wise. And then by month 3, we have them show us present the spreadsheet to us, because they're developing that literacy of, how do I monitor my budget? How do I not panic because it shows 0% for a specific grant? Well, it's a one-time grant. You're getting it in December, so it's going to be at 100% at that time. Not every expense is distributed every month at, about 12% each month. So by the time they're ready to present the spreadsheet to us, there's this appreciation, this confidence that was not there. And that skill set is not just so they could spin off and then be able to present this to a board of directors. They usually do present it to a steering committee or advisory board. but it's just to know how to read the budget, how to make modifications, and then make the decisions that need to happen for staffing or travel, etc. It guides their actual leadership decision making.
That's great to hear, Jennifer. So I'll just wrap up and we'll go to questions, but I'll just let you know that I'm not going to go into the transition checklist. It's long, it's detailed, it's intended to be a little intimidating because, you know, you shouldn't take the transition from a fiscal sponsorship to independence lightly. And it doesn't matter, you can't take it lightly. There's just so many things you have to do. You can't proceed until you do the things. And I think we're going to have future webinars where we're going to get into more detail about the checklist, but you'll have it beforehand just so you can start reviewing the long list of very basic things that I would ask you to consider. Whether you remain fiscally sponsored or whether you leave, you should start developing some awareness of each of the items on the checklist, either appreciation for what your fiscal sponsor is doing for you or getting ready to be able to do those things for yourself when it becomes time to leave. And it can take a couple years to get all those things in place and transition.
Yeah, that's great.
So
Poppy.
that's it for me.
I have one last thing as the funder for some of you guys that I wanted to note that, again, I know it's a lot to think about, and this checklist that Poppy and the Marissa will send out from Poppy is super expansive. But again, in our case, we got some help. So we hired a legal firm, Caritas, down in Phoenix, and it wasn't as bad as you'd think. We paid $6,000 for sort of the full suite of help to file our incorporation and our nonprofit status application with the IRS. And we got Poppy's help as well. And it was absolutely worth every penny and every hour spent. So keep that in mind. And as a capacity building funder with our grant cycle coming up here, just starting here August 2nd, actually, right, Marissa? It's something that you could put into a capacity building proposal, is to help pay for some of those services. You could absolutely have a proposal that talks about your desire to explore becoming your own entity. So there are some opportunities, and there are other funders out there who will also fund in that same area. So keep in mind that you don't have to come up with money out of nowhere sometimes. There are people who are willing to help, and we are, of course, always willing to talk to you, provide some support, some suggestions, some references. So CPF does want to help our grantees reach that next level. And again, we've been there already. So thanks so much, everyone.
Great. Thank you, presenters. I've learned so much the many times that we talked about organizing this workshop. So I want to transition our time to our participants here to be able to post their questions. We have one here from Carrie that's directed toward Jennifer. Her question is, can you provide federal grantors end of the year financial reports or other financial reports?
Yes. So something that, C does or any fiscal sponsor can do, or even with your own books, is set up sub-accounts. So there's the project that's, the account in the accounting software where funds get restricted because those donations and income belongs to your project activity. And from within that, you can track the financial activity of a grant with a sub-account of your project too. This is quite common. So particularly with federal funding sources that have to be spent very carefully, this can be tracked separate of your general operating support or everything else, basically. So that what that means, though, is that that burden isn't just on the fiscal sponsor. In fact, it's actually more on your team, so that when expenses come through to be paid, the fiscal sponsor needs to know, so that the disbursement process has to be labeled for the federal grant. You agree upon whatever you want to call it as a sub-account, and then you label it so the sponsor knows. And then at the beginning, if you have employees on payroll, you and the sponsor can talk about what percentage of time is in that federal grant budget, what can we bill to the federal grant versus everything else, all the other easier money to manage, individual donations and foundation grants. So that at any point in the year, we just extract a profit and loss statement out of the accounting software that shows that money allocated for the federal grant. It makes reporting a dream by doing it at the beginning. But you have to have that discussion at the beginning with your fiscal sponsor about restricting those monies. So as time goes on, you just have a clean financial report. I hope I answered your question.
And just so you know, we're actually
Yeah,
having
okay.
a follow-up webinar strictly on reading financials and that's what's in the works for our next webinar. So we have a new message. Can you provide, this is from Hokobo, can you provide insight on an experience for groups that are currently fiscally sponsored but are growing towards the development of a cooperative model or a business model rather than a nonprofit model? And I believe it's not directed toward anyone. So if there's examples out there that folks have, copy.
I just want to make one point before the examples is that you need to be very, very careful because when a nonprofit, the word is dissolves, right? When you end that entity, which is the first thing you have to do before you form the new entity, any assets that are left in that nonprofit when it dissolves may only go to another 501c3 nonprofit. If any of those assets go any place other than another 501c3 nonprofit, there's probably a provision too where they could go to a government entity like the tribe. But anything else, that's a rather serious violation of federal law with quite serious financial consequences. So the way I would rephrase it, Jacobo, is that you would be thinking about ending the nonprofit, however that winds down. You're basically going to zero it out as much as possible, and whatever assets are left have to be transferred to another nonprofit. At the same time that in a totally different room, you're having a totally different conversation about starting a new entity, which will not be a nonprofit. And then you're just in the realm of like all the conversations about all the models for different kinds of business for-profit enterprises. But be very careful on that line. Even like right now when you're asking the question, any conversations you have going forward, because you wouldn't want to ever create just the impression out in the world that you were going to do it the wrong way because the consequences would be so serious.
Yeah, anything from you, Jennifer, on that relationship? For CPF, we've never seen that. So we've never seen a nonprofit go to a business arrangement really. And that's, again, primarily because the organizations we work with are set up in certain ways, right? But I have experienced nonprofits that have a business arm. And so that is another option as well. And that's something that I'd really personally recommend getting some legal advice about, because there are some ways around that to have both entities at the same time. You just have to be really, really careful with how you set that up, how you handle your accounting, what that separation is. So there are opportunities, but again, because it is a really sticky situation, or can be, get some legal advice as soon as you can to start building out what that could look like, because it does require more steps, certainly, than just becoming a nonprofit or just forming a business. Anything, Jennifer or Poppy, on that point or other points there?
Yeah, I would just want to add to Poppy's point, which was spot on. Couldn't have said it better. Be very careful about not using time that you're paid by the 501c3 to form the new entity. Do it after hours, not while you're being compensated. Resources can move from other entities to a 501c3, but moving resources out of a 501c3 is tricky and, very tricky. We talk about 501c3, but there's 501c4 lobbying, there's 501c6 membership orgs. There's all different types of other nonprofits, and some can be tax exempt, but donations are not tax deductible. So just explore those models to see if it makes sense. Otherwise, the direction Heather is talking about is a for-profit arm and a nonprofit arm that are separate legally. Could be an option there. And you can talk to social enterprise attorneys as well to look at where those worlds can meet sometimes if you're not set on the cooperative model.
Okay, here's another question that came in. Can you share examples of allowable for-profit income models under nonprofit entities? For example, a fiscally sponsored project bringing in income from CSAs or farmers markets.
I think Poppy, is that a Poppy question? It sounds like one.
Well, I want Jennifer to answer it too, but Jennifer, I want you to know that I want to take the agricultural part specifically.
Yep.
Like the CSA and farmers market part.
Okay, I'll save that for you. So there are ways you can bring in, let's say, earned income to a nonprofit, let's say for services you provide. That's one model. Some with memberships, you could offer something in return. Memberships can go a few different ways. Sometimes you don't really offer anything and it's just truly a donation and people just want to say they're a member. But sometimes when you offer something of value, that's kind of potentially earned income because you're offering something in return for a contribution, that's allowable. There is a point where if you're selling something because you just came into a lot of in-kind donations of something of value and you're selling it to earn money, it could become taxable. So it could still be allowed within your charity, but it could be considered taxable because it's not truly related to your mission. Like if you got donated, 1,000 toasters for some reason, I'm going to guess that has nothing to do with a charitable mission and you want to sell them to make money or art, valuable art pieces were donated. That's something you'd have to make sure to talk with a tax attorney, or if you have a fiscal sponsor, they should have one that they work with. So I'll hand it to you probably to talk about the agricultural part.
Yeah. So Jacobo, first of all, I just want you to know that if we need to have this conversation in more detail later, Marissa can put us in touch and I'm happy to have that with you. But you mentioned specifically selling in a farmer's market and selling through a CSA. And those are two really good examples of things that can be kind of tricky to understand, but they also illustrate the nonprofit law regarding what's called unrelated business income. So it's perfectly fine. It does not violate your nonprofit status at all to have unrelated business income, but you have to file a special tax return and declare that income and pay tax on it. Okay. But the real question is it unrelated business income or not? And the root way you answer that is you have to look at your exempt application. And what you said in that exempt application was your mission. Now, this is tricky when you're working with a fiscal sponsor because you don't have a mission before the IRS, right? They do. And their mission definitely didn't say anything about CSAs and farmers markets. Like almost certainly, Jennifer, right? Your mission doesn't say that your mission is to provide a rural community with consistent access to affordable, fresh, healthy food, right? But a different nonprofit, like the nonprofits you may form, may absolutely have that in their mission. If that's in your mission, and then you form a CSA or go to a farmer's market and you make a sale, it's an actual sale, it's an actual transaction, there's even a profit taken there, right? That is in direct furtherance of your mission. And it is not unrelated business income. It is related, right? And the test is an important relationship. Well, it's an important relationship to actually sell the food, right? Or to receive that SNAP benefit in exchange for the food. So there's no issue there about it being taxable, unless there's some issue with the root nonprofit mission of your fiscal sponsor. So it could be problematic if you're fiscally sponsored and your fiscal sponsor has a very generic mission.
Thank you, Poppy.
And I think there's many ways around that. It's just a little caution there.
Great. Thank you. Carrie or anyone else, do you have any questions? I know Carrie was posting earlier. She had a lot of questions. So
it's really hard. It's really hard for me to believe that only 6% of the total funding source is taken out. Where I work right now, it's 25%. And, that covers all our financial, all our insurance, all our, all that other stuff. So 6% it blows my mind that you'd have the legal support, the financial support, all the other capacity that you were describing. And I find it very hard to believe, honestly.
It's true. It's 6.5 technically, but we're actually sustainable from that. We have a team of 15 people on our operations. We actually end up with a bit of excess in our operations budget every year. We don't have exorbitant salaries on our team, but we keep our costs down as a fiscal sponsor. And we've talked about raising our fee, and our founder shut it down, rightfully so, because that's not what we're about. But yeah, I mean, we do it, we 6.5%. That includes, you know, I mean, I could go into what it includes. It doesn't include when you have employees, employer taxes for the employee. That's a project cost because it's the cost of your operations. The benefit part where we offer medical, dental, vision, life insurance, that's a cost to the project. So that, but that's never, you know, guaranteed as, I don't think within fiscal sponsorship is something covered, but those are direct costs of doing business. Otherwise, all of our HR support, financial activities, organizational insurance, grant management, it's there. We could talk further. I'm
You're good. Thank you.
baffled by the high fee that you have to pay. That's above the highest of them. I mean,
it takes away from the you know, it takes away from our programming, you know, so
Yeah.
our community is the ones who suffer. My second question is, how much is covered under your general liability?
So this is customized for each project.
Okay.
I mean, we have $1 million and then an umbrella, an aggregate of
Okay.
another $1 million. So there's 2 million covered under the GL.
And this is just for probably the participants. This makes me feel like, why don't the tribes have programs like this? You know, why don't Hopi now, you know, surrounding tribes have programs for like this? You know, right now I've been trying to, well, I've been kind of thinking about like what you're saying, you know, moving back and doing like youth programming, family programming, community programming. And I'm like, you hit a barrier every turn. Well, you need CSAs. CSAs are the only ones that can do grants. You need, and so, you know, there's number one. And then who can help you with your finances and stuff like that. And so I'm not even sure, you know, like, and then it's so regional. Like, for example, the Navajo, it's Western Navajo. And then when I go to the Navajo regional headquarters there, the chapter house, they're like, no, we don't do that. We don't help with finances or stuff like that. You know, so, and then I went at Monkopi, you know, they're saying, no, you got to go through the CSA. And then I don't know, it just seemed like there's so many barriers. It just makes me, as you're talking, I'm like, gosh, I wish our tribes had entities such as these to create employment, bring money to the reservations, you know, and where, you know, we could feed into the tribal revenue as well. So that was just a thought as I'm listening to you all.
Well, you hit the nail on the head. It is about looking at the larger spectrum of how we build partnerships around building local capacity. And as a funder, that's what we're always thinking about. And when I first met Jennifer and had conversation with Amber as well, and understood the type of capacity building support that they're providing as fiscal sponsors, blew my mind. I was just thinking this is exactly the right way to do it, you know, in terms of making sure that you understand what your sole role is, and that you're making sure that as you take folks underneath your wing as a fiscal sponsor, that they really understand their role, and that they're really supporting the capacity of these organizations. So I really felt like Jennifer was a good fit in helping you paint the picture of what a healthy relationship is about, and understanding that from the very beginning. And so that was, I think it's really important to understand, because a lot of times when we don't have the capacity at the community level, and you have great ideas, you want to bring in revenue, right? You have potential there. A lot of times, Joe just hit the nail on the head earlier, saying that your approach a lot of times to become a fiscal sponsor, but are you really prepared for that? And a lot of times, you know, it's with good intentions that you bring people under your wing, when initially you're not set up to be a fiscal sponsor. There's very important on the back end in terms of providing that kind of support to understand before you even go there. And so, you know, I really wanted this topic to present that, you know, what does that look like? Should it feel like? What are some of the legal parameters we need to take into consideration? What are some of my needs as I'm looking for a fiscal sponsor? And am I going to feel supported under this fiscal sponsoree? And so I'm hoping that our presenters hit all of those topics very well. And I will be following up email with everyone with their contact information. If you have follow-up questions that you want to have specific to maybe what you're experiencing. If there's not any other questions right now, I'd like to bring us to a close. But thank you all for your time today.
Oh, no, I got more questions.
I have
I got more.
I have something I'd like to add.
Okay. Okay.
I just want to thank you for this, and it's to me it's just about relationship building, learning, communication, and it kind of brings me to a point where we become parents. You know, we end up becoming parents, and we don't have a book or a checklist or a way, you know, and we kind of do it legally. I'm glad I wasn't hauled off as a parent, maybe for something that I didn't really know, maybe. But just learning to build the capacity of whatever it is, even in the marriage, you know, building that relationship and trying to learn how to navigate so that you're going to be successful at the end. And so I really appreciate it, and I'm looking at it from that perspective. And for Carrie and for even Zuni, you know, you all, you know, understand that. And we're figuring it out. And for tribal communities, the nonprofit world is really new. And with the big plus of the pandemic was it established more nonprofits because the need was so great. We always, you know, we complain about our tribal government, so let's do something about it. Maybe half of the nonprofits don't even know what they're getting themselves into, but they just saw that need was so great. And so I would really like to add to this relationship of it's okay, but yes, we should understand our legal and financial responsibilities, just like a parent, you know. We didn't know what our legal and financial responsibility were. All of a sudden we had this little tiny baby and we had to take care of it and figure it out. You know, some of us had support, some of us didn't have support, some of us found the support, some of us struggled, you know. So I kind of look at it that way, but the big plus is there are entities out there. And I was just currently on a meeting with a funder through Hopi, and there were almost 20 people on that call. And out of that whole, there was funding available. Out of all the people that were on that call, they were all doing projects, but they were not even a bona fide 501c3, and they didn't know what to do.
Yeah.
And so,
Yeah.
you know, so it's out there. There are people out there that have a passion even for what they want to do. So this is just one component of that. And sometimes when it takes a village to raise a child, you know, sometimes you step in not only as a buddy, but just to try to help because the need may be so great. So, and if it was a mistake, we'll just learn from it and refine it, or, you know, but keep those relationships strong because we all live with one another in our communities. And we have to see one another somewhere. So it's got to be positive. Even your ex-husband, if you see him in the community, you still have to have that relationship with him in one way or another, you know. So so I just want to thank you for this. It's very, very informative. And just to add that component to the discussion, and that there are groups out there and that everybody can do it. We just have to figure it out too. So
That's
thank
Scully
you
Bunny.
for that.
That's Scully Bonnie for saying that. Yeah, this was a learning session. Definitely. Thank you, Marissa, and presenters. So this is directed at Marissa and Bonnie, I guess. That's the only people I recognize. But so so with with that capacity of, a lot of those little, projects going on. And I know that one of those little groups, they tried to go 501c. I don't know who their sponsor was, but they ran into numerous problems with trying to find out budget, trying to find out how much money they could spend. And so that's why I'm kind of like on the edge of, and maybe it's worth going all the way through it for the 501cs, to and versus a fiscal sponsor, because of the situations I seen were occurring, and it was a creation of the COVID, and so and then that's when I also recognized that even though they had a fiscal sponsor, trying to bridge and working that fiscal sponsorship with the tribal council was also an issue. So do you know how physical sponsors that you know of that exist work with the tribal governments, Marissa?
That's a really interesting question. Not that I know of in terms of providing that type of service to government, but it doesn't necessarily always have to come from government in terms of starting that transition, whatever that next step looks like. And I think that's where Poppy's checklist of what you need to get in place to really understand what might be the next best step for the group of people you're describing. And it also, there's definitely potential to have discussions about who is that next, and what does that entity look like in the future? Is it going to be housed under government? Is that the best situation? And that all depends on the topic that we talked about today. What are the needs of the group? And who is the best to fulfill that and support that? And it doesn't always have to stay in that initial first launch in terms of what that relationship looks like. It's dynamic, just like every living thing. It can evolve and it can change over time. And so that's just an ongoing conversation, but it all is going to be relative to what are the needs of that group and who is best to serve that and fulfill it.
Okay, Jennifer, what is your relationship with tribal councils?
We haven't had that opportunity to explore that, but we do have a board member who sits on a few boards relating to Indigenous organizations out here in California. So if it's something to explore. And another thing I just want to circle back on, Carrie, you'd mentioned, is keeping money in the communities. Is your fiscal sponsor, do they have a banking relationship with a tribal bank or credit union? Or because that's something we do, where we have a group in Montana and we opened up a credit union account because the missions were aligned. And we have groups in the South where we open up banks and we look at socially responsible banks to keep the money in the regions where the projects are at.
Cool.
So that's something to explore too, that financial presence as well.
Good to hear.
We definitely can continue this conversation, Carrie, offline and further explore. I want to make sure that we're paying attention to our time, and we all are over. But I definitely send out everyone's contact so you can follow up with additional questions and that checklist as well. And just so you know, our next topic is going to be about financial management. So we can dive deeper into financial questions at our next webinar. Thank you very much, everyone, for your time.
Thanks,
Thank you
everyone.
for the
Good to see
opportunity.
faces.
Thank you.
Bye.
Bye.